Every time it seems like we are out of a financial crisis, we face another one. Remember back in 2008 when the housing bubble burst, millions of people lost their jobs, homes and everything else. Europe spent the next 5 years trying to recover. In fact, countries such as Greece just recently recovered from the 2008 crisis. And yet, here we are in the middle of another crisis. But if you watch our videos, you know that a crisis is an opportunity to build a fortune, and we have taken a look into some of them in previous videos. But to take advantage out of a crisis, you need to be able to spot them before everyone else does, and get yourself ready. And that's what we will do in this video. We will take a look at 5 greatest financial crises in modern history to understand why they happened, how they happened, and how did we recover from them. So let's start with the first one. The Panic of 1907. The United States wasn't always such a great financial power. Back in the 19th century, it was a country of turmoil. The Civil War almost destroyed the country, and its financial market wasn't working properly. The US didn't even have a central bank to manage financial crises as many European countries did back then. To understand the importance of the central bank, just imagine if the Fed didn't exist today during the current crisis. The only reason the stock market surged back is that the Fed injected a ton of capital into it. Unemployment rose to an all-time high, but the Fed gave the government the ability to distribute stimulus checks. If not for the Fed, the current crisis would have been much worse. In 1907, one of the famous bankers wanted to make a fortune by pushing United Copper shares to rise and force short sellers to buy his shares to exit their position. But his plan backfired as the short sellers found a different source to buy United Copper shares. That move bankrupted the entire company and multiple other banks. As the news of bankruptcy spread, depositors rushed to the banks to withdraw their savings. As the banks ran out of cash, they stopped lending money to their depositors and went bankrupt one after another. The stock market crashed to an all-time low. There wasn't a central bank back then to restore depositors' faith in the banks. So Wall Street turned to JP Morgan. He deposited a significant chunk of his wealth into some of these banks to restore public's faith in the banking system, and convinced other wealthy bankers to do the same and save the economy from sliding into a crisis that God knows how long it would last. The dot-com bubble. The internet has become such an important aspect of our lives that it's difficult to imagine that 20 years ago, the internet wasn't even a thing. The 1990s were the golden era to start an online company. Amazon, Yahoo, PayPal, eBay, Google were all developed during that period. The people who understood the extent of the internet knew that the internet is going to revolutionize the world. Everyone wanted to take advantage out of this gold rush. So investors threw their money at every company that had a .com at the end of its name. Everyone knew that most of these companies aren't going to survive, but one success would not only compensate for all of these failures, but would pay back enormously. And that's what happened. In just 25 years, Amazon went from nothing to a $1.7 trillion company. But the overflow of cash into the tech companies pushed stock prices way higher than they were worth. Companies that barely knew what they were doing were valued at hundreds of millions of dollars. The Nasdaq index market rose by 400% in just 5 years. By the mid-2000s, the bubble began to burst. Stocks of internet companies started to plummet. By 2001, most internet companies had to declare bankruptcy. The stock market had lost $5 trillion in market capitalization since the peak. The Nasdaq was down by 78%. Number 3. The Great Depression. It's often called the greatest financial crisis in the history of the United States because it lasted 10 years and crushed the entire economy. The American leadership tried everything to save the economy, but nothing worked out. Every solution proved to be ineffective in the face of such a crisis. When World War I broke up, the entire European continent was at war. But the war slowly spread to the rest of the world. Everyone was eager to win, but unfortunately, supplies were limited, especially food. So the Allies turned to the United States for help since it wasn't directly affected by the war and had the economic power to provide that. So the US became the only major supplier. Wars by no means are good, but it brought a period of economic prosperity to the United States. If you are even a farmer, you could produce as much wheat as you can and sell it at the highest price. Even though the war has ended by 1918, the demand for American goods, especially wheat, didn't fall because the entire world was still recovering. Farmers began taking huge loans to buy more land and equipment to farm more wheat, which led the real estate prices to increase. That pushed people to buy even more lands, hoping to sell it later for a higher price. The same thing was happening to every other industry. Stock prices were dramatically rising. Even foreign countries and companies started investing in the US. I guess you can already see the flow. Many companies were overpriced because of excessive demand. In fact, most of these investments were based on speculations. Nonetheless, that didn't stop people from investing. When Europe recovered, the demand for American goods, especially wheat, fell, since other countries started farming as well. The oversupply drove prices down and pushed the stock market to fall. Everyone started selling their shares to cash out before the stock market plummets further. But that crushed the market even more. Since wheat prices started falling, farmers couldn't pay back their debts. So that pressured the banks since everyone was asking back for their deposits. The panic has already spread to the entire country. Banks couldn't pay back their obligations and had to shut down one after another. In just 10 months, 744 banks failed. The 2008 housing bubble. Do you like real estate? Probably yes. So does everyone else. In the 2000s, investors were looking for a better return for their money. The stock market just crashed and the US Treasury bonds offered a low rate of return. So investors turned to real estate. But big investors don't want to deal with individual buyers. Tenants are pain in the ass. I can say that from my own experience in real estate. So banks took all of these mortgages, bundled them together and sold them to investors in forms of shares. Investors were pretty confident because worst case scenario, if the borrower would default on their loan, the bank will take the house and sell it since home prices were rising. When banks realized that there is such a huge demand, banks started giving mortgages to people with a really low credit score. Why? Because they would take these mortgages, bundle them together and sell them to investors. Low interest rates and rising home prices kept attracting more investors. But then one borrower defaulted on their loan, so his house was put on sale. Then the second one defaulted, and then the third. Soon there were so many houses back on sale that home prices started falling. That scared off investors, so they stopped buying these mortgage securities. Lenders who created mortgage securities were left with lots of worthless securities, which made home prices decrease further to the point where financial institutions had to declare bankruptcy, such as Lehman Brothers. AIG, the company that provided insurance for these mortgages, soon collapsed since it provided so many insurances without having the money to back them up. The mortgage crisis crushed the financial industry, which almost led to the collapse of the entire economy if the Federal Reserve didn't intervene and bail out the big banks. The COVID crash. The current crisis is so big that 10, 20 or 100 years from now, people will be reading in history books about how the entire world economy crashed overnight because of unexpected virus. For most people, a pandemic seemed more of a sci-fi movie, but what happened back in March is truly historical. The crash was the fastest fall in global stock market in financial history, and the most devastating crash since the Great Depression of 1929. After decade-long prosperity, overnight 38 million people had to apply for unemployment benefits, and the US GDP fell by 5%. The stock market crashed by 50%, but that didn't last long since the injection of cash by the Fed quickly brought back the investors to the stock market. However, despite that, it will take us at least a few years to completely recover from this economic crisis. It's the nature of the economy to crash. When the economy is rising, everyone jumps in to earn more money, which leads prices to increase faster than they suppose, which leads to a bubble, and bubbles burst sooner or later. If you have enjoyed this video, make sure to give it a thumbs up, and if you're new around here, then subscribe and turn on your notifications. Thanks for watching, and until next time.